In the currency quadrant, taking a look at a two-day losing streak in the June euro currency after a streak of 4 consecutive sessions higher. The euro pulled back today, making it 2 straight sessions lower. But in the bigger picture, it looks like merely a pause in this new small rally that started on the lows of April 16th and moved up 1.92% by Friday, May 3rd before closing lower, completing the next session of a higher close and then pulling back these last 2 sessions. The high today, 107.76. That was only up 6 basis points. The low, 107.53, down 15 basis points. We finished the New York session right around 107.61, which is down less than 0.1%. However, at the midpoint of the week, the euro is working on its first week lower in the last 4 when you include this week. Right now, the euro is down a little bit more than 0.2% on the week with 2 trading days remaining. We did get some German data last night in the form of German industrial production, which matters because Germany is the manufacturing engine of the EU, and its industrial production declined in March, although less than expected. Expectations were for a drop of 0.6%. It only dropped 0.4%, although the prior month was revised lower. The good news about that is, though, that it was revised to plus 1.7. So even a revision lower doesn't seem so bad compared to this month's data. On top of that, we had an ECB auction early in the morning. Both the 3-month bill and the 6-month bill from the European Union, or I should say from the ECB, came in lower coupons and have, absent any other data, that could slightly weaken the currency. So on top of the German data, it's a little bit of a pressure on the euro. On top of that, however, we did have a stronger dollar today, mostly against the yen and the Australian dollar. The stronger dollar came on the back of slightly stronger treasury yields here in the US, which also put a tiny bit of pressure on the euro currency.